In our operating initiatives, retail banking obviously has been our mainstay since our inception. It's a very cost-effective platform, robust offering, well-positioned to attract consumers from other banks. As most of you know, there's been a lot of regulatory shuffle in the last year or two, a lot of changes in fees and structures within the traditional banking community. A lot of them that's where they make their money. About 60% of their income really comes from fees back to the consumers. Some of the overdraft charges and things were changed by regulatory guidelines, so they're putting it back in standard checking account fees. We think with our platform and our programs, this will even be a greater opportunity for us in 2011 and going forward to attract more consumers to our model. We added text messaging in 2010. We've added and expanded on that. You can literally, with a smartphone, do your full banking, including bill pay, checking account balances, look at history, transfer monies between accounts. You can do virtually everything on a smartphone that you can do through the internet or through a traditional PC. We introduced a debit card rewards product to deepen our relationship with our checking account customers. Again, this is at a time when most banks are pulling away the rewards programs. It's driven by the merchants on the other side, so there's no net cost to the bank. But as, again, other folks are pulling in services, we were able to put out a new product that had no financial impact to the bank. We continue to promote and develop the Finance Work program. It's a fully integrated personal financial management software. Obviously, there's been a number of products on the market for years. Microsoft had one. Kiplinger many years ago had a product. They've all kind of gone by the wayside in part because nobody likes to deal with bills and looking at their financial structure to begin with. And then when you have to look at it twice to take it from the bank into the PFM products, nobody does it. But when it's fully integrated, auto-filled in for the consumer, they found a great value to it, particularly following the economic times that we had recently. You can literally, it'll pop up based on the activity you've had in your account. It shows you red and green days for the coming months. If everything stays the same, you're going to know the days you have money, and you know the days you're going to have to scramble. So it's been a great product, and we're getting fantastic penetration within the checking account customers. And even our high net worth customers might not be worried about cash flow today. It's got a great aggregation tool, and you can bring in your account balances from other financial institutions or brokerage houses. So again, seamlessly, you build it one time and it'll pull it all in and give you a personal financial statement that is literally consolidated from all accounts that you have. And you can mix and match and play with it. You can look at brokerage plus banking. You can look at long-term investment plus brokerage. It's a very, very good tool and has enabled us to really promote our checking accounts. The mortgage lending area, most of you know in 2007 we did the Landmark acquisition. We have continued to invest in the online mortgage platform ever since. We have increased marketing efforts and lead sources in 2011. We're in Google, we're in LendingTree. We have a number of external lead sources. In fact, in the last 30 to 45 days, we actually do a hot transfer. And so it's working out tremendously for us. The Enhanced Mortgage website, we're redoing the site again. We did a pretty extensive overhaul of it 2.5 years ago. It's being redone. Will be launched here hopefully before the second quarter is out, and it will even be more self-service and more play. Any of you that are First IB customers, as you log in now in the upper right-hand corner, it was just a bank login. It now defaults to online, but there's also mortgage and other products underneath. So as we expand the platform, you can skip right into the mortgage product if you're checking or updating information on your mortgage loan side. We're also looking at a new origination system that actually expedites the back-end office services, make everything run a little more smoother from an operational standpoint, and better integration into our core platform, which again will allow us to improve the productivity of the staff we have on hand and not cost additional employees and time from the outside. And the mortgage product truly is a 24/7 product, 7 days a week. And literally once you're into the system and you started the application process, you really don't need help from the staff to run it all the way through. We're augmenting the loan officers and the sales staff we had to date with very experienced professionals. As you well know, the mortgage market has kind of imploded on itself. A lot of the traditional brokers and services that are out here aren't here anymore. Here in Indianapolis, we had Bank One close down a very large mortgage center. Inland Mortgage had a good community and a good program going here in the Indianapolis community. We're able to attract some of those employees our way. And the good part from our standpoint, it's a compensation system based on actually closing mortgages. So Bottom line is we've increased the staff geometrically, but we really don't pay anything unless they're successful and they close a loan. And there's a lot of controls in the mortgage industry. Some of the problems caused over the last couple of years is because of compensation that was driving folks to do things that weren't good for the industry and pushing the higher rates or the higher the valuations in play. That's all been regulated and played. Every one of our loan officers now has a broker ID number, and they're all tracked independently. So it still allows as a success compensation platform, but it's based on parameters and products that will also help protect the market and make things run smoother for everybody. As you can see, we acquired Landmark in 2007, and our growth has been geometric. The multicolor line is the annual loans year to date, and just doing a comparison of first quarter over the prior first quarters, we almost close to doubling down on first quarter of 2010, which was a fantastic year for us. Obviously, dramatic increase in 2010. And it appears at the current time, at least through the first quarter, that we're going to stay on the same path. Second and third quarter, this is a seasonal business. First quarter is a tough time of year, kind of dies off in the fourth quarter because of Christmas and holiday activity. So second and third quarter, we'll really know whether we're going to match up with last year or not. But we're off to a good start. Obviously, there was a massive refinance program at the end of last year when interest rates fell below 5%. When they ticked up, we thought we would fall off first quarter significantly. Obviously, they dropped back down here in recent weeks below that 5% mark, appear to be stabilizing there for a little while. Our volume has picked up accordingly, and it looks like we should get a good kick into the beginning of the second quarter. Currently, all of our mortgages are originated and sold on the secondary market. We take an immediate pop to income. We're not holding them. We quite honestly don't want 4.5% 30-year mortgages on the books as a long-term liability. At some point in time, interest rates are going to climb, and we don't want to have to worry about the match-off on that. But once rates get competitive, there's absolutely nothing to stop us from putting that $245 million in loans on our books versus selling them in the secondary market when the economics make sense. So it is an opportunity for us to do some tremendous asset generation. We really have taken all the knowledge base and the folks that we got from Landmark and created a great program that is national in scope. We're in 49 out of the 50 states. Maryland has a couple funky laws that we're not into, but we're every place else across the country.